Sorry, guys. I'm gonna see if there's a possible long opportunity here in the Swiss. Other than that, I'm not looking to trade too much. Hey, babe, man, do you know where Harvey is? Is he taking a break of some sort?
No, I haven't talked to him this morning.
Thanks. Just concerned, that's all. Really, really slow day, guys. Crude might have put in a bottom tick with Woo, but I wanted to reclaim a little bit more, possibly even push down just a tad more. So it's right up to the daily -3. That's a decent sign for a bottom tick. See if we can get one more out of it. Yeah, right. I agree. Not much going on. And as I always say, if there's not much going on or non-directional, you have, if it's not good with your style, then you should not trade it. The chance of me taking a trade today is pretty slim. Unless I find something else other than indices. But even then, with CPI and everything, that's going to affect, the currencies. It's going to affect the indices clearly, and the energy sector. So for someone to, only sit on indices is a little bit tough.
Yeah.
Fucking rain. Why is it raining in California? Why is it cold in California? What the fuck is going on? That's not what I signed up for. Alright, cruise giving a good push down right now, so I would probably flip to your time frame and figure out which one you want to trade, or if you can find a decent entry into it. Let's see if it's going to do another bottom tick right here, or if it's going to hold. Loss is a little bit too high for me to want to take that. I'm going to let it go. Gotta wait for it. There goes that still liquidity. See what it does from here. Mark your entries. Mark your reversals. It's not too odd, right? Because end of the day, you know, we're gonna sit in this weird range, right? So, you know, I'm not gonna sit here and be too presumptuous, but in my personal opinion, it's probably just market makers stealing liquidity back and forth, or algos stealing liquidity back and forth, and nothing, you know, directionally biased. When it comes to correlation, right, you kind of have to, it has to be on a much higher time frame. When I say much higher, it doesn't have to be like a weekly or something. But it can't be on like a 5-second, 1 minute, or even like a 15-minute chart. I mean, it could, and it could work well sometimes, but you just have to be careful with it. I'm not going to say you shouldn't use it. You just got to be careful with it. Specifically, day types. A day like today is just not something I personally would lean on it too much. I think this is perfect for scalping. That's just, you know, my opinion. Crude doesn't look like it wants to slow, so I'm not taking it until close. The Swiss entry was actually decent, but it didn't tick back to where I wanted to get to. Gonna leave crude alone. That's good, right? You know, if you're asking me about my opinion as a checklist, I think it's great. I would also use it to kind of formulate a day type as well. So that's something you can use it for as well. Okay, let me see. I think that NQ high of the day is in. Based on some price action, unable to see me close to that London. I think it might be in. Yep. Also working inversely. It could be. So just kind of keep that in the back of your head as you're going about it. Dave, what's going on in California? Why is it so goddamn cold? Why is it raining? It's fucking June. Yeah, Dave, got here what? Less than 24 hours ago. And I was like, fuck, it's so cold. And I think that's why I have like a slight cold now. I didn't pack much either. Like I have like half a suitcases. I'm not staying long. Of course, and most of it is like shit I have to give to people. But it's fucking cold as hell, man. Or not as hell, but it's just cold. So it reminds me of like November. If you can get it traced back to somewhere about like 792.5 in NQ, I would say that that'd be a decent, try for a short if you're looking for shorts. ES would probably be closer to 56.5, but even then, it's kind of in the middle. ES is looking a little bit more weak though. But yeah. Let's do a quick trade check for ETH and RTH. For those of you guys who are new, trade check is essentially how many trades you've taken throughout the session, whether it's extended or what have you. Right, two. Which two in the Russell? Or sorry, in the NASA. Thank you. Good guys. Those who took zero. I think the environment's not that it's tough. It's not a tough environment whatsoever. And I think, you know, one in ZB. Right. To the downside, JJ. Starts off the top of the page. Cool, right. Oh, JJ, we both know that you rarely hold on to stuff. Not talking shit, but it's pretty funny. You always get these good calls as far as directional, but you don't hold. Yeah. Again, I don't think today's a tough day to trade. I think it's a tough day to. It depends on your style, but for me, it's like, in my style, I see no setups. If I'm buying it here, it's for a intraday scalp. I'm not buying it to swing here. I don't want to short it here either. Yeah, I think today's a great scalping environment. Scalper's paradise. Even though that crude is down 4 or something points, I didn't even see a reason for it to be down that much. And they might just be taking advantage of the upcoming news in the next couple of days to shake out really, really weak hands. So who the hell knows? ES is what? Basically done nothing. There goes your, it's coming up to 56.50. You know, if you're looking for a short or something, or if you're itching. I still probably wouldn't even trade it, to be honest. All right, there goes your 56.50 in ES. See how that reacts. No, when I call stuff like that, that's only if you're looking for a short. I think that it can pull back there before it goes. It doesn't mean that I'm taking it. Doesn't mean that you should be taking it. It's just, hey, whatever. You know, if you're looking for a short, say at 55, you can be like, okay, well, Zero thinks it's going to be at 56.50. I can wait until it gets into that area, see how I like it before I take that short, and then we'll go about that. Good morning, sir.
Howdy. How are you?
Under the weather. Under
Must
the
be.
weather. Was it?
Still in Taipei.
No. I'm in California for like 2 days.
Oh, geez.
Yeah. I didn't hit you up because like I'm only gonna be here for like 2-3 days.
Okay.
Shit. Something happened, and then just fly right back out. I think we're gonna fly. I think I'm gonna fly out of. I think it's LAX. I gotta check. My agent booked it for me quick, and
Mm-hmm.
I didn't even check it. I was more concerned about the flight out to make it in time. But yeah, I think all this like moving shit is getting me sick. Yeah, I'll put it this way: it was so unplanned that I didn't even bring my golf clubs. I usually never go anywhere in the world without my golf clubs. I didn't even bring it.
Yeah, that's how I feel regarding my bike. If I don't have my bike with me, something went awry.
Yeah, it's like unplanned shit, right?
Yeah.
How's everything with you? How's your weekend?
It was fun. Pretty quiet. Had someone leave my house a moment ago, so can't complain.
What? Someone just left your house. It's like
Yeah.
Monday morning. And you're
Yeah, they were here. They were here yesterday and today.
Oh, okay.
This morning.
Went that well, huh?
I guess.
Good.
I was a bit impatient since I'm relocating out to Denver in about 7 to 9 days.
Yeah.
Partially depends on when my cars are going to be delivered.
Your cars?
Yeah, I'm having 2 of my cars shipped out there.
Oh, shit.
Well, initially it was only going to have my Plaid shipped out, or my Model S Plaid, and then I decided that I may ship the Model X as well. However, I kind of want a Rivian, so I'm trying to find one.
Jeez. Why not just buy one out there?
That's what I'm trying to find.
Dude, I heard the Plaid's like super, super fast.
It is. It's a good daily driver.
Not the X?
The X isn't a bad daily driver either. Because both of them I have in Plaid models. So from a driver perspective, I guess since I've had my Plaid for both Model S and Model X for over a year now, slightly over a year, the only thing I might change is I'm contemplating whether or not I want to put larger brakes on the Model S, because let's just say it doesn't stop particularly well, but what else do you expect for a car that weighs 5,000 pounds and goes 0 to 60 in 2 flat?
Yeah, it's super crazy.
And they're a lot cheaper now than when I bought mine.
Ryan asked you a question.
Oh, okay. Hold on. SUV. I don't like how the truck looks. Also, I'm not hauling stuff around. I'm not a wannabe that, I drive an F-150, quote unquote, I drive a F-150 Platinum, but I don't haul anything. I care about more of the utilitarian approach. And actually, depending on where you live, that actually is a significant difference transitioning back into an ICE vehicle. You notice a substantial difference. But for example, a Model S has, when you put the seats down, the amount of storage space is quite significant. It's Very practical car. Even if you have an active lifestyle.
The Model S?
Yeah.
Really?
Yes, the amount I can fit in there is quite surprising. As in when I initially had bought two 55-inch Samsung ARC monitors before
Oh, you have an ARC
returning.
monitor?
And I had them from August, September, October of last year, and then realized I don't like them whatsoever. I could fit two of those in my Plaid when I put the back seats down without much of an issue.
How much is a Rivian these days? Or now?
90, 100, I don't know.
Okay.
Kind of like the Lucids too. Also, this is where the uncertainty. The facelifted 2024 Cayenne Turbo, or even Cayenne S. Oh, that's where I was going regarding Colorado. Anyhow, because of the uncertainty with when my car is going to arrive, I'll be out there in 7 to 9 days or so, maybe a bit later. Ended up matching with someone on Tinge and was really intrigued. I said, okay, I'm not really fond of wasting my time messaging people. Do you want to fly out? So I flew her out. Arrived Sunday. And,
You flew out Sunday just to like not text.
yeah. Okay. Do you know how many points I have on my cards that I almost never use? I need to put those towards a good purpose.
Yeah. Like, we matched. Let me fly you out. See you face to face. Make sure I'm not getting catfished. I don't want to waste time texting, but I'll fly you out.
I don't know. The thing is, I don't know. It's I'm exceedingly selective on whom I swipe, but the profiles almost never intrigue me. When you come across someone that's, I have my types are really odd. It's usually 5'2" and below or 5'10" and above. Anywhere in between is kind of a gray zone. So my preferences are usually tall or short. Nothing in between. But when you come across someone that's
climb her, or you want her to climb you?
well, when I say 5'10" and above, between 5'10" and 6'1". So up to my height. Yeah, but it's really uncommon to come across someone that's not only really involved and interested in fitness, but had their degree in philosophy, working in healthcare, so two of my interests, really into jiu-jitsu, CrossFit, shooting guns, tactical events, Spartan races, everything to and from that.
She sounds very white, bro. Is she white?
Strawberry blonde, but yeah.
Oh,
so,
wow.
I don't know.
I think strawberry blonde girls are hot, dude.
Yeah, something about it. Anyhow, it was very intrigued by the interests. It's just not common to come across it. I figured, okay, since I'm going to be relocating to Denver for 4 months, 8 months, 12 months, whatever, why not fly her out and see if there's compatibility before I even arrive? Because then if I arrived in Denver and we went on a couple dates, it would be a waste of time versus, okay, I can figure this out right now.
She's pretty adventurous, huh?
I guess.
Well, it's not really a guess. It's factual. If she's willing to just fly out to someone's house.
Oh, no. So what I offer to do in those circumstances is I always book an Airbnb or something, or a hotel house, and with whatever you're comfortable. And so that was fully booked, but things were going well enough that didn't end up using it.
Interesting. At least I guess you can say you're a gentleman. I booked you an Airbnb, but you didn't stay there.
I never have expectations. It's more or less I use it to facilitate meeting people. As I said, I have an excessive number of points on my cards.
Yeah.
and I almost never use them.
Then you took her on a marathon.
Depends.
Depends what type of marathon you're speaking of.
Are we talking dog years, cat years, human years? It really depends.
Good for you, man.
It's that
Can you
oddly enough. What?
You gonna buy a real bike when you go move to Denver and bike around there?
I have numerous bikes. As whenever I travel around, I always have my bikes with me. When I was out in Walnut Creek up on Mount Diablo, hold on.
That's gonna be fun.
I don't know. That's her decision, Dingeth.
Is it her decision? I mean, technically.
Yeah, because I don't establish emotional connections with people. That's my issue. So that's why it's entirely whether or not she wants to become involved with someone who doesn't become emotionally attached.
Oh,
That's entirely her decision.
see what you're getting at.
Oh, that's not long distance. I'm moving to Denver in 7 to 9 days. I decided to be frugal. Yeah.
Well, I took a stop on the Swiss trade for less than half of an hour. Just took a stab there. Just being honest and upfront.
Oh.
Yeah, wouldn't she just like be like, fuck it? I mean, unless she's really teetering on the older side. Wouldn't she just say, fuck it, let's just see what happens?
26, but yeah.
Oh, 26, damn. That's,
I was about to say, I'm 27, so as of 12 days ago, 13 days ago, whatever.
happy belated, man.
Thank you. I don't celebrate, but
Well, you don't celebrate, but apparently you got a present for the weekend.
so wherever I travel, John, as I said, I always bring my bike with me. Or one of my bikes, I should say. This was up on Mount Diablo, in outside of Walnut Creek in California. And then the other was outside of, it's called Three Bears Peaks, which is Lafayette Reservoir around there. So in and around Mountain Creek. No, I don't. Altitude is not an issue. Any of you want to potentially stalk me in Denver and show up? There's this one gym that when I was living in Denver before called Traverse Fitness that has an altitude studio where they can dictate the oxygen concentration so they can bring the room up to 20,000 feet. And I often will use it several times a week. I bring my bike, set it up when they have it set to high altitude. And then I'll be cycling or doing a workout at 16,000 feet.
Pass out?
What?
Do people pass out?
No, if you're starting to feel faint, they recommend
To stop and all that.
yeah, just stopping. But it's a really good community of individuals. That's one of the reasons why I'm going to join the gym again. Is I don't like classes. I have a fair bit of disdain for doing classes. So I only go during open gym hours when there are not classes so that I can use the altitude studio. But also the community of people there are genuinely nice. So it's a bit of a social outlet because I'm a hermit.
Oh, fucking. Why is California cold, man? Shit. Um, that's crazy. And if you guys want to stock numbers, just look for the guy with tree trunks as legs.
As I said, I've been gradually cutting down. So right now I'm sitting about 177 or so.
Jesus. Dingeth, I don't know. I barely know what time it is. And I didn't let. It was funny because like when I landed, I was like, oh shit, the NBA game's on. And then my friend's like, what are you talking about? I'm like, it's Monday, right? He goes, no, it's Sunday or Saturday. I was like, what? Like, what the fuck? And then I had to like calculate all the times. I'm just all sorts of fucked up right now. But it feels like 65, maybe 60s in LA. But yeah, it's traveling like, yeah, kind of fucks up my rhythm.
This is aggressive, please.
Yeah, it's 7:33 a.m. Yeah, it's 60 right now. Currently 60.
Oh, that's what I was going to send you. You had mentioned the possibility of going out to Tahoe at some point.
Yeah, I'm still are you talking to me? Okay.
Yeah.
Yeah, I'm still coming back on my scheduled dates, like in August or something. Yeah, I even though this is like a random emergency trip,
Yeah.
I'm still coming back.
I sent you a link. I actually was considering renting this for 2 or 3 months if I really wanted to be fully a hermit. I don't know.
2 to 3 months.
No, well, no, the reason being is instead of going to Denver initially, I would have contemplated going to the link I sent you because they offer it for 2 to 3 months. I don't know how many people with whom you intend to go out to where you said you were going.
People, yeah.
But it's this is I think this could be a really good option if you're going to be in and around South Tahoe.
Yeah, this is nice. It's not too bad, actually.
No, it's really reasonably priced.
Yeah, at first, like, looking at that number, I was like, what the fuck? And I realized, oh, it's not that bad.
Yeah, rent it for a month, and that would be the price of an Airbnb for a nice Airbnb for a week.
Yeah, exactly. Oh, that's not bad at all, actually. Surprisingly.
That's why I was considering if I really wanted to be a hermit. I should live out of here for 2 or 3 months.
Beautiful bike paths, I bet, for you.
Yeah, biking in and around Tahoe is fantastic. But for sheer convenience on a daily basis, I prefer riding inside because I can be doing some work while I'm riding unless it's a race. But even during cool down periods, so let's say I have a 45-minute cool down after a race or 45-minute warm up, I can often be running tests and training and then after the race do a large parameter set, run that through, be finished, hop off, go shower, come back. So for sheer convenience, I prefer Zwift, but if I want to actually enjoy the outdoors, not be pale, then go right outside.
There's a lot of bike trails in Mammoth you should check out. I love Mammoth.
Are you going to be available in about 45 minutes or so? Because I need to hop on a call.
Yeah, awesome.
All right. Yeah, I'll be back in a little bit, everyone. Take care.
I was actually talking to someone about riding Thingeth, and I used to go riding all the time. And I think it's great that I learned how to ride a bike. But I quickly realized, like, riding a bike is not about if you crash, it's when you crash. And I have a couple close ones, so I was like, I think I'm done with this shit. This is a while ago. Oh shit, 3 times, this is crazy. Yeah, I think the crash on the street is like, it's instant, you know. No, fuck that. Of course, most riders will probably say that we're wrong, you know. It would depend on how you crash and all this other stuff, but I don't know. That's hilarious. I don't see anything, guys. I don't really see much. Took one stab, small stab at a long in the Swiss. You know, it didn't pan out, so be it. I don't see shit to trade. If you guys see something to trade, let me know. Yeah, it is very, very slow. And, you know, I wasn't even riding that fast too, right? Or ending it. When I say not that fast, I mean I'm not like going like 120 or something like that on the freeway. I was going fast, but not that fast. But usually it was at night that I was riding. If I just wanted to, like, you know, blow off some steam or just kind of, you know, go joyriding, right? I didn't go to like the canyons or any of that shit. Yeah, so yeah, exactly. I wasn't trying to like get all funky with it. I barely even weaved in between cars, to be honest with you. I always felt that was kind of dangerous. But I would say that being an ex-rider, I wouldn't even call myself a rider, having learned how to ride a bike, I'm more careful when I drive. And a lot of bikers, I notice that they notice it. Like, I get a lot of waves from bikers, like saying thank you for moving certain ways or whatever it is, to kind of clear them a path to go through, or, you know, certain things. So. Gotta be careful. Yes, Chia, it is really slow. I mean, it's almost like if you wanted to trade, you know, depending on which direction you're looking at, NQ is a little bit better, just because you can get a little bit more out of it, and the Russell as well. If anything, the Russell is the best one, just because it's still with the old contract, and it's currently fighting to get into the new contract, and that fight will actually create a lot of volatility. But the best trade is not to fucking click anything today, in my opinion. The best trade was JJ's trade. Short the bonds. But he didn't hold. Let me see too much shit happening. one more stab at this Swiss. If you come down to like 101.55 or so, I'd be interested in it. Again. If you're looking at the Dow and you're looking at it clearing certain things, having an LB, don't be faked out by that. That's not exactly a good LB yet, in my opinion. Meaning the price action isn't fair and clear because of the rollover. Hey guys, I'm gonna take an extended break. I'll be back. I'm here, but I need to take a break. I'm just a little bit under the weather. Just at me if you guys have any questions. I'm still here. I'm just not. There's not really much going on anyways for me to say anything. So, but I am here. If you guys have questions, let me know. Just at me. All right, guys. See you guys in a bit.
All right, bye.
Later.
Oh, you remember how you didn't, I'm not saying you didn't, but remember how you guys didn't really believe me on all the warnings on the mental framework section, but I kept warning you? Here's another one of those moments. What's so good about AGM? Obviously, there's a ton of benefits. You're getting individual feedback on things that you need to improve or see that you didn't see before. You're developing process, you're building skill sets, all that stuff. But really, one of the biggest benefits or reasons outside of all that other stuff for good performance is the environment we have. You are accountable to me. You are accountable to peers. It matters to you. You are doing the right type of work. You are doing end-of-day reviews. You are doing good preps. You are focused on incremental improvement on a weekly basis, on getting better at something, on doing something in particular well. Guess what? It's easy to do once you finish AGM. Not do as good a job with all that stuff. Not be in a good network of peers. Not, have that accountability. Not, or slack off on some of the work. Maybe you don't need a process goal on some day, and things like that, or you tell yourself that. Maybe you slack off on the self prep or work on your mental framework. You get lazy and don't upload your trades into something like TraderView or whatever you want to use. Whatever the case is, that environment, which is one of the most important, which is why people are the only people who really, really make it as traders are not people who do it alone from their bedroom with no either prop desk or major community or some serious, like they're working for a corporate or whatever. Go find them, guys. Let me know where they are, right? You don't come across them. You come across people who are lying and fake. You need a good environment to succeed.
So this
understanding the realistic path that it takes. So telling yourself that this is not a get rich quick. Please just tell yourself that, because it's not. Trading, but swing trading just feels like I'm making it to the next level. So I'm holding trades for a week, 2 weeks. I'm holding my winners a lot longer. Yes, there's more risk involved, but the profits are higher. I just feel like it's in so many words, I feel like I'm leveling up. It's like the next level of professionalism.
Yeah, no, definitely. And
because what I'll do is if I see those numbers, if I see that I'm up like $5,000, $6,000, $7,000, and then I see it go back to me, when I see it go back up to that that higher number again for the second time,
it's well worth it. It's a resource that Steve Moore has been doing for a long time. It's very, very consistent. You will lose money, okay? Don't let me make it seem like this is the panacea to winning every single trade. It's not. It's not a be-all, end-all. It's not a magic bullet. It's just a way of framing out a logical expectation that has statistical information supporting it in hindsight through 40 years of data. What he's done is taken 40 years of data and compiled it to show the average movement over 40 years. And he shows it to you also, which I'm not showing you here because I'm not trying to put everything that he has out. But this is certainly enough, I think, because if I would have saw this the first time, like many of you probably are, I would be subscribing to his stuff and being a client or a customer and being happy about it. I put this seasonal tendency idea on the back burner when I first was introduced to it by Larry Williams, because it didn't make sense to me. Like, it felt like, that was after it happened, and I just don't know if it's going to happen again, because I didn't understand what I was looking at. I didn't understand how to read a market, and I'm suggesting to you that You probably are going to be in that same position. I can show you where it's good because I'm showing it to you in hindsight. But my students have also seen me talk about seasonal tendencies. And in fact, I made it public knowledge on YouTube in my community tab where I've literally called the big grain market run that we've been seeing in soybeans, corn, and wheat, and their moves that are $15,000 per contract and higher. And it's all based on this idea right here that nobody really is introduced to unless you've been a student of Larry Williams, like I was in 1995, or you've been watching my stuff. Because Larry Williams doesn't get a lot of attention anymore. And Steve Moore doesn't get a lot of attention as a whole, but he deserves it because he puts an amazing product out. It's not expensive. And for you to spend the little bit of money that you end up spending to be a customer of his to get this information, to me, it's a bargain. It's, in my opinion, it's worth way more than he sells it for, but I got to give credit where it's due. This is one of the tools and who I got the information from. So that way you know I'm not claiming authorship. It's not mine. I told you where I learned it from, how I was introduced to it, and who does it. There are lots of seasonal tendency products out there, and some of the most recent ones are just basically making very close similar lines to what Steve Moore has been putting out, but nobody comes through like he does. Like he gives you supporting factors and information about these individual markets. He does it for all the currencies as a futures market. He does it as a commodity, like if you're a trader for like coffee and gold and silver, he has all those seasonal tendencies. He has them all. So to close this video and summarize basically what it is I've mentioned here, if I was 20 years old all over again, how would I go into the marketplace and how would I focus on learning, developing a specific price action model that would know when I'm trading what market and how I would be trading it? Well, this is it. I would look for these types of moves when it's bearish, and I would be a specialist between October and December on the Canadian dollar. I'd be looking to go short Canadian dollar, which would be going long dollar CAD. If we look at that relationship in comparison, the orange line is the dollar CAD pair. So here's the futures market for Canadian dollars going lower, right? Just like the seasonal tendency says it should when it's bearish. If it's a bullish Canadian dollar, would you expect this type of move? No. Can it form? Yes. But is it likely to? Probably not. But the opposite is seen here in the orange line, which is what? The dollar CAD. So this is going up, exactly the opposite of what you see here on the Canadian futures. And if we look at the dollar CAD pair, October up into December, boom, there you go. That price run in 2018 was a phenomenal price run, and it's all linked to that seasonal tendency. This simply means, and what I'm showcasing here, is that there are underlying seasonal tendencies that the banks usually follow. And because these are currencies, don't think for a moment that they don't have seasonal tendencies that are just as strong as a grain market like corn and soybeans, or even live cattle or lean hogs as a commodity. These currencies have cyclical factors, and you can ferret out that cyclical factor with seasonal tendency charts that are reliable. And there is no one else in this industry, in my opinion, that has better data, better product, better statistical probabilities with seasonal tendencies than that of Steve Moore and the website I gave you earlier in the video. So hopefully you've got something out of this, and hopefully you've been inspired to dig into it. And if you're a 20-year-old or a 50-year-old or a 40-year-old with a 20-year-old heart, noticeable. Okay, in other words, if the market is likely to go higher, in other words, it's been a bullish trend, it's been going up, maybe the dollar's about to go down or it's been going down, the Canadian dollar futures market is likely to go up from March into May. That's a seasonal tendency. How do you use this information? Well, if we go to a chart, this is the actual Canadian futures. You can see here, March 2020, the market creates a run higher, just like the seasonal tendency. We can see here on March of 2021, same thing. The market creates a low and starts trading higher too. So the seasonal tendency is in fact something that you can see visually. Does it mean that every single year Canadian dollar futures is going to rally March to May? No, because if the market's bearish, I don't expect this seasonal tendency to form. Now, if we compare and contrast, the orange line here, that is the dollar CAD Forex pair. And I'm showing you the data from forex.com. Here's that Canadian futures contract price. And then, as you would expect, the dollar CAD pair is a mirror image of that. So we have the high trading down lower. So everything we see Canadian futures going up, and the seasonal tendencies measuring that particular market. Well, but because the pair in this name is dollar CAD, this is showing the relationship. When these conditions are Hello folks, this is part 2 of how I would restart all over again if I had to go back and do it all over again. It's a completely blank slate, no experience whatsoever, and only having access to the YouTube level content that I put on my channel. Before I get into this one, just a book recommendation for you. This is The Mental Edge in Trading. This is Jason Williams. He is Larry Williams' son. Now, while this isn't really a technical trading book, it's more along the lines of the things I'm going to talk about here. Now, I'm not trying to reduce this book's effectiveness in covering the things I'm going to mention briefly here, but I will mention that Larry Williams brought this up early on in my career. I was first exposed to the idea of matching personality to trading styles by Larry Williams' courses that I discovered and purchased in 1995. So his son naturally carried on with that school of thought and becoming a doctor and a psychiatrist. He ended up making a book with his father's experience in trading, and I guess growing up and listening to his father talk about the ins and outs of the psychological aspects to trading and how traders many times fight to do something they're not really equipped mentally to relate to. And I'll give you my personal experience and how I think about things and how I am from a personality standpoint and how that matches up with a specific trading style. So I would first obviously consider my personality, and I would try to match my personality to the appropriate trading style. Now, what does that mean? Well, there's lots of different ways to trading. There's scalping, day trading, short-term trading, swing trading, position trading. My personality is I'm quick-fused and I'm prone to changing my mind frequently. So while that may seem like indecisiveness on the part of someone that doesn't really understand what I mean by that, it just means that I can see lots of opportunities and I can see micro market structure in price, and I can draw a relationship between that and opportunity for me to get in and get out. So in other words, I can see a framework in lower time frames rather quickly, and I can get in and get out rather quickly. So my personality personally lines up with day trading and short-term trading because I like to take a lot of executions. I like to get in and out and parlay my equity up. That's the goal as a short-term day trader, is to get in, take your surgical strikes, and get out. As a to take a lot of executions, I like to get in and out and parlay my equity up. That's the goal as a short-term day trader, is to get in, take your surgical strikes, and get out. Try not to overstay your welcome. I do not have patience to sit in long-term swings. So with that, it helps me narrow down my focus. And I don't care how well someone else does trading in catching 1,500 pips, 2,000 pips, 3,000 pips for a year, holding on to these long-term trades. I just draw no affinity for that. Short-term trading allows me to keep myself in my own lane, try not to worry about putting on more stress than it's necessary. And I really remove the whole aspect of performance anxiety, which will obviously be a thing for the males in this career when they first start. They feel like they have to do something else in addition to what they may already see working early on. Now, I'm not saying everyone's going to find success early on, but those that do find success early on, they make the mistake of looking at other people and saying, well, I'm not doing what they're doing. And that means I'm probably not doing as much or as well as I should. And you change lanes. And that changing of lanes many times will take you out of what you're really prepared to do the best in. And that means, like, I'm not really good holding long-term positions because I'm going to see 30 different position opportunities in a week. Well, that doesn't fit well with someone that is expected to get into a trade and hold it for months at a time, because I'm going to be wrestling with, man, that's an opportunity for me to go short here and I'm long. It's problematic. So this book, I think, also helps match up your unique personality, helps you discover what your unique personality is and how it might relate to a specific style or approach to trading. And I personally enjoy the frequency of trade setups and intraday charts. So I don't spend a lot of time on monthly and weekly. Just once in a while, I'll get a long-term perspective, and that usually stays in motion for a number of weeks. So I'm not trying to flip-flop back and forth with my expectations, and I try to milk a specific bias that higher time frames already outlined. Now, obviously, when we get into trading, we're met with all kinds of flash and glitz and image and all of that colorful thing that tries to get your attention. The opposite side of that is the quant side. So you have Instagram traders, fakes, and then you have the left side where it's quants. They're highly, highly mathematically derived, system-based, rule-based ideas, and they're kind of like the nerdy crowd. So there's going to be two schools of thought for you, and I would really elect to go with the quant side because I'm analytical, I have computer science background, information systems, and computer programming. That side of things is more appealing to me, and I'm a numbers kind of guy. I've never been an image person, even though I did do that kind of stuff as a young man. It doesn't give me the satisfaction of just beating the socks off the marketplace with data. And you're going to have to decide that early on too, but I would not go towards that Instagram crowd like I do. Place in the quant side because I'm analytical, I have computer science background, information systems, and computer programming. That side of things is more appealing to me, and I'm a numbers kind of guy. I've never been an image person, even though I did do that kind of stuff as a young man. It doesn't give me the satisfaction of just beating the socks off the marketplace with data. And you're going to have to decide that early on too, but I would not go towards that Instagram crowd like I mentioned in the first volume of this series. I would keep my focus only on one market and avoid switching markets sporadically. That means if I don't have a trade set up, or if I don't see something that is producing a condition in the marketplace that I could operate favorably in, it doesn't mean I'm going to abandon that market. It just means I'm going to learn patience and sit and wait. That part of your development is crucial. And this is the reason why I teach my students to focus on one or two markets that are closely correlated and measure that against a benchmark like the dollar. If you don't have the patience to wait for your setup, you're going to rush to do things and gamble. And the only way that you form and forge patience is to develop it by sticking to one market and identifying when it's not trading in a condition that's favorable and just being patient. It gives you clarity. You don't guess about whether or not you should be doing something or not. You don't abandon your market simply because it doesn't give you the opportunity you usually take right now. You simply wait because you know what you're looking for. So early on, when I first started trading commodities back in the early 90s, I would jump from one commodity to the next if it didn't.
A few months ago, so back in December, and I'm honestly telling you that back in December, price action was something else. The action on the DOM was something else, and I was having like 3 or 4 consecutive days of making tick drills, like I don't know, maybe 1 hour, 2 hours a day at most, taking a lot of trades, but staying positive. So after a few months right now, I also try to do the tick drills again, you know, just the DOM and the tapes. It was simply impossible. So one day was positive, one day was negative, and I was feeling like I was playing a bet, just like a casino.
Agreed. Yep, I agree.
Yeah, so without watching other charts, I don't know, market profile, volume profile, maybe a footprint, having the tick charts up, maybe NQ, Russell, or the other things for correlations. I don't know. In this situation, I think it's pretty hard just to rely on scalping the DOM purely.
Yep. Yep. Oh, what are we at? 14,800 in the NQ.
I was
55 is like a psych number now. 55, obviously we're at 43, 55, but 42, 55 was a psych number. It's crazy. There's psych numbers. Every number's a psych number now.
yeah, yeah.
85, 85 was a
it's-
big one.
Yeah, it's either a 0 number, an even number, or a mid with a 50.
What do we got? We got FOMC on Wednesday. Oh, heads up, at 1 o'clock today Eastern, you do have the 10-year note auction. I used to trade a lot of ZB, but so that 10-year note auction's a big deal at 1 o'clock Eastern, so an hour and 45 minutes. I don't know if the ES will do much, but you'll probably see dome depth levels drop pretty quick. The 10-year note is the biggest mover for the auction. So we have that. FOMC begins tomorrow. Oh, you got a CPI at 8:30. Yeah, and the 30-year bond auction at 1 tomorrow. And then FOMC on Wednesday, which I don't trade. I'm not saying not to trade it. What's the point of doing a one lot? Yeah, maybe it goes 20 points in my favor. I don't know, but I'll trade the morning up till like noon. Odd pattern in the NQ. Drifty up. Mm. didn't give me a setup. I knew that if I looked hard enough, I would find a reason to get into another market. And sometimes that was painful. I would lose a lot of money and it would make me angry. And I'd say, okay, well, I'm not making any money in this green. I'm going to go into the meat market and I would trade feeder cattle, or I would trade pork bellies or lean hogs, something to that effect. And if I took a loss there, then I would say, okay, well, I'm going to go in, I'm going to trade crude oil or heating oil or unleaded gas. And then if I took a loss there, I'd jump into cocoa or sugar. I would jump all over the place sporadically. And that's a loser's cycle. And you don't want to start that. And you want to enter this whole process with a professional mindset and perspective. That means think of an Olympic contestant or an athlete. Okay, you don't see an Olympic athlete going from the swimming pool to the shot put, okay, or trying to throw the discus, or to do the relay race. They specialize in on one thing, and they're only going after the gold on that one specific event. And they're really focusing and narrowing their focus on one specific process that they believe will lead to their superior result above everyone else, and the gold. That's what they're after. They're not trying to be the master of every Olympic event. Same thing with these markets. A professional trader is going to be focused on one specific market, narrowing their focus and knowing what it is they're looking for. And I'll cover a little bit of what that would be and how I could use the YouTube channel to formulate that idea. But keeping your focus on one market is important because you'll learn when not to do something and you'll know when to do something. You won't feel the tug of war of emotional, psychological effects of not doing something because the gambling aspect of trading won't be an enticement for you because you know what you're waiting for. If it's not there, you simply wait because you know, given enough time, that specific market will give you a setup. I would build a study journal of back testing that single market or asset class. And I would start with the Eurodollar. Now, what do I mean by study journal? And what is back testing? What would I be doing? Well, I'd be going into the charts. And since my preferred outlook on the marketplace is short-term to intraday, I would have an hourly chart of the entire week. And with that hourly chart showing Monday through Friday, I would look for old highs and old lows where the market traded above an old high, rejected, and go the other direction. Or I would watch where the old low was taken out by a lower low and then reversed and went the other direction. And I would study that market structure in those two reference points. Now, initially, I would not be trying to pick the weekly range or the direction. That's not what I'd be trying to do in the beginning because it's weekly range to or low, other direction, or an old lows where the market chart, hourly chart of the entire week. And with that hourly chart showing Monday through Friday, I would look for old highs and old lows where the market traded above an old high, rejected, and go the other direction. Or I would watch where the old low was taken out by a lower low and then reversed and went the other direction. Or I would watch where the old low was taken out by a lower low and then reversed and went the other direction. And I would study that market structure in those two reference points. Now, initially, I would not be trying to pick the weekly range or the direction. That's not what I'd be trying to do in the beginning because it's easy to trick yourself into thinking you know what you're doing and then being discouraged when you don't. When you find out later on you don't know what you're looking for. So to do things at a very modular pace and slow pace and a realistic pace in development, I would focus in on optimal trade entries and how that would be easily determined looking at the marketplace as I'm going to show you in this volume. And this would be done at least 6 months. So for 6 months, I would expect myself to submit to back testing and logging in a study journal the way I'm going to show you in this. So what does it look like when you're back testing and filling up a journal with 6 months of back data? Well, as I mentioned, I would have an hourly chart. And this is exactly how I started as an S&P and bond trader. When I stripped away all the retail stuff, I used the S&P market and the bond market. Why those two markets? You said one market, Michael. Well, it's essentially one market that I was following, which was bonds. But because bonds and S&P are inversely related, so in other words, bonds go up, S&P goes down, and vice versa. If one goes up, the other one goes down. So it doesn't make a difference which market was giving me the setup. I knew if I could relate it to the other, it would support the opposite view. So since I'm still working with one market, it's the same thing as if I was using the euro dollar against the dollar. I want to make sure that what I am anticipating in the euro dollar is the opposite in the price action in the dollar. So on an hourly chart, I'd take the entire week and break it up from Monday to Friday. This would all be done after the fact, okay? Because the whole pantomime here is I'm developing, and how would I teach myself to go through the process of developing with a steady learning curve and not waste a lot of time? You start with an hourly chart. Also, let me preface it by saying this is my approach. This is where I would have gone back if I could and do this very thing, because I would have learned at a quicker pace. Not that I'm speeding you along, but because if I would have figured out early on what my personality is and how it would relate to trading, day trading and intraday trading, you only need an hourly chart. You don't even need a daily chart. You don't need a weekly chart. You don't need a 4-hour chart. You don't need a monthly chart. You don't need any of that kind of stuff. You just need to look for market structure at turning points, okay? And at key intermediate term highs and lows, that's all you need to focus on. What are they? Well, if you look at this chart here, I have a high here, and this is a Monday. It trades up on Tuesday, runs that previous high, and breaks down. Trades lower the next day on a Wednesday, trades higher than this high here, then trades lower. We have a low here, it trades down below that, and starts and turns the other direction as well, after also this low taking out that. So all I'm looking for is intermediate term highs and lows, and are they traded through, and is there a possibility there's going to be a rejection? Because I don't need the market to trade 300 pips in my favor. I don't need to trade 200 pips in my favor. All I need is 50 pips. 50 pips, and I can do as much as I want, taking that same 50 pips and repeating it every single week. So what I'm focusing on is learning how to find one setup or multiple setups that would net me a 50 pip net result for the week. Because that's the first thing. You got to set a target for what it is that you believe that you could do consistently on a weekly basis. Do not set the target for 50 pips a day, because you're not going to hit that. Okay, you are not going to hit that, period. You want to have something spread out over the course of the entire week, and 50 pips is only 1/2 of a penny move in Forex. So if I'm only trying to get 50 pips, even if I don't get my full targets and I just get 10 pips each day trying to do this procedure, in theory, I could get 50 pips that way and still never hit my ultimate targets. So even in failure, reaching my milestone each week. This is crucial because I put too much emphasis on being right in the beginning of my development. And every single time I had small little modular wins on paper. Now, these were live trades back when I was trading, but when I say I had paper profits, they were unrealized. They were only showing that if I would close the trade, I would have this much money in real dollars in my account. But I would hold on to it for my targets and never understood the concept of taking partials along the way and paying myself. So before I would learn that, I would teach myself and condition myself to do what I'm going to show you here. So each day you split the hourly chart with vertical lines. They may not be that visible here, but there's one here, 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 and here. It's Friday's trading, and then the end of Friday's trading is there. So all I'm looking for is intermediate term highs and lows where the market trades above it, and then once it does that, does it break down? And I'm going to go into these areas and study it on a lower time frame. 15-minute time frame is all that's necessary. And the same thing in here, same thing with this low there, okay, and same thing with this low being taken there. And you study it and you look for these specific characteristics. Now on Monday, we can see that the market trades above this short-term high here and above this short-term high there. So we're only going to look, for the sake of brevity in this volume, because I could obviously talk for 6 hours and bore you to sleep, but I could dig really deep with this just in this one whole chart here on this hourly chart. But we're just going to look at just one specific day on that Monday, and the whole framework is this short-term high is being violated there, and we're going to look at this fractal right there. All right, so here's the 15-minute time frame on May 10th, 2021, and here is the naked price action. And what you want to do is, in your study journal, you want to take the chart and have it set up where you have it naked, no annotations, nothing. And you want to have the access to
I just don't have much to say. So 6175 was that little pop up this morning. 6175 is an RTH swing area. I mean, I don't know. I have no opinion on this shit. It's got no momentum. It's got no feel to it. NASDAQ in creeper mode up.
Yeah.
areas in your chart where you can write out your own annotations after the fact, because you're going to dress this up, but you're going to learn later on, a week later, a month later, 3 months later, when you come back to it, you're going to see what the market has done since these specific days. And this is how you teach yourself, by repetition, seeing how they all nest together, each individual day's price actions, basically a small component or a cog in the greater scheme of how these markets move and book. So you want to start with a very simplistic approach and a good 15-minute time frame and an hourly chart for the whole weekly range. And you do this every single week, and you do it for 6 months. You don't try to demo trade. You don't try to go in with a small live account just to see what it feels like and feel the psychological tug of war like everybody that doesn't know how to make money tells you to do. That's nonsense. You're going to start with the wrong foot first doing that. The way you go into these markets and you learn how to do it without any emotion, without any fear of losing, is to simply desensitize yourself to that whole aspect of it needs to be right. Because it doesn't need to be right. You don't need to be right. I didn't need to be right in the beginning, but I felt that I had to be right all times, 24/7, every single trade. And that is problematic. It conditions you to have unrealistic expectations. So we have to just strip this thing down into a simple pattern recognition approach to seeing something that repeats over and over and over again. Well, let's take a closer look at this specific day. When you annotate your chart for your study journal, you want to find the optimal trade entry that occurs between 8:30 in the morning and 11 o'clock New York local time. That's what you're going to annotate here. In the morning and 11 o'clock New York local time. You annotate your chart for your study journal, you want to find the optimal trade entry that occurs between 8:30 in the morning and 11 o'clock New York local time. That's what you're going to annotate here. Okay. Here's the high. It trades down below a short-term low here. So that's 8 shift in market structure. It rallies back up inside of this. So that's 8 shift in market structure. It rallies back up inside of this shaded area here. That's optimal trade entry. 79% retracement level, 62% retracement level there. The idea is that you're going to use the 62% retracement level as your hypothetical entry. Now, this is all hypothetical. You're not attempting to do these trades. All you're doing is building a study journal, which is back testing old data. So what this does, it helps condition you to see specific elements to these ideas and then watching it flesh out and build up as time goes on. Well, if you look at how this market goes from this high down to this low, shift in market structure, rallies back up, you go short right there. This is the first time the candle touches this price level. The stop goes just above this short-term high, so your stop loss is there. 10 pips, nothing less. Every single example, you're going to backlog and show in the examples a 10 pip minimum. That's the least of a stop loss you can use. That way, you're not trying to convince yourself that you can go in 2 pip stop losses, okay? Avoid all that stuff for right now. 10 pips is reasonable. If you're using a 15-minute time frame, that's reasonable. It doesn't mean that you won't get stopped out. It doesn't mean that it's going to work like that in the future all the time. It just means that as a rule-based idea, going in, studying, back testing data, everything that's already happened, hindsight, you're looking at examples to frame out something that can build a respectable risk to reward model. Not that I have that as a dependence in my trades, because I don't look at it as I have to have this, I have to have that in terms of what I risk. You don't know what the market's going to give you. Just because you have your trade framed out with 10 to 1, you're risking $1 to make $10. You have no idea and no assurity that it's going to move $10 in your favor. No one knows that. I don't. don't know that. There isn't a trader alive that's going to be able to tell you that's going to absolutely happen. Because if that was the case, we'd all be billionaires. But you have to have some kind of idea that you're going to submit to. Okay, so as a suggestion, and this is all this is, all of your framework, you want to try to set it up with 3-to-1. That means you're trying to risk $1 to make $3. If you do that, you have a really good chance of, over time, the losers being overtaken by your winners. And you don't need to have a high strike rate to be profitable, theoretically. So right here, we have 10 pips defined as our risk. And the market comes back up one more time. Note this, okay? So anywhere over here in your annotations, you want to record how much time it took when it started the trade here. How much time did it take before it started really moving in your favor? I like to see 1.5 of what I have risked before I would consider moving a stop. That was one of the original ideas I had from my trading is whatever I'm risking, it has to move 1.5 times that before I even move my stop. Now, if you have that rule-based idea, this return back into the general area where you got in would not stop you out. Many times traders would rush their stop down in here and it comes back, knocks them out, and then it moves in their favor because they're so afraid to take a loss. Do not be afraid to take a loss and submit yourself to the initial risk that you put on and leave that there until it at least moves 1.5 times what you've risked. What does that mean? Well, it has to move 15 pips in your favor before you move your stop loss in any degree. And at that point, I'm only moving it to half the initial risk. Once it does 2 times what I've opened up myself for initial risk, in other words, it's moved 20 pips in my favor, then I go to break even. And you want to have that annotated here. How much time does it take for you to be able to do that? And you log that, and you simply do this every single day. Old lows is what you'd be aiming for. So there's liquidity resting below that. It's sell stops. Using your fib, you have an extension of -1. And I've already showed this on my Optimal Trade Entry pattern recognition series, which you're welcome to look at on my YouTube channel. It's in the playlist section on my YouTube. So this is the target, but we're going to be trying to get deeper into this sell side liquidity pool. So this is our target. To get this, we're going to assume that the market needs to go at least a good 5 pips below that. Now, why 5 pips? Some brokers have really tight spreads. Wouldn't that get me out? No. As a rule-based idea, you want to anticipate a 5-pip run below where you think it might go. So frame all your trades that way, so that way once the market does in fact trade to that point, 5 pips below it, no matter what broker you have about a 90% likelihood that they'll fill you. That's why I have that rule-based idea. And you can see the market does in fact trade down to that level. So 5 pips below this target, below this liquidity pool level. That's why I have that. What broker you have, so that way once the market does in fact trade to that point, 5 pips below it, no matter what broker you have about a 90% likelihood that they'll fill you. That's why I have that rule-based idea. And you can see the market does in fact trade down to that level. So 5 pips below this target, below this liquidity pool, that's where you would have it marked. Now, when you have it marked up like this, then you want to start adding all the annotations. But the main thing is knowing when that shift in market structure occurs. That's what sets up your pattern. And then once you have it all fleshed out with all the annotations, and it doesn't take long to do this. It literally only took me less than 10 minutes to mark this chart up just like this. So even if you have a job, you have children, you have a family to take care of, whatever, okay, you still don't have to spend a whole lot of time doing this. And you're only doing it with one market. And once it's all marked up, obviously you want to fill in the details. You know, what time did the short hypothetically fill? And what time did the target fill? So you essentially got in at 10 o'clock in the morning here on this candle, and hypothetically you would have got out at around 8:45 p.m. Time in the market is 10 hours and 45 minutes. The drawdown was 3.2 pips. That means this highest candle right here went 3.2 pips away from where your entry was on this candle. That's why I'm teaching you to use a 10 pip stop loss, because it gives you a forgiving range where you don't have to be so precise and you're linking it to the old high. And if you start doing this for 6 months, you're going to have a backlog of historical data that is fleshed out in such a way where you can go back and see how these individual unique days are part of the weekly range and then also how it is part of the monthly range. Like, how does this particular day, the 10th of May 2021, how does it relate to the entire trading of the month of May? And how does it relate to the first quarter's trading going into the second quarter of 2021? Where is it in relationship to all of that? And the only way you're going to understand how these markets are fractal and how they fit together is by doing these types of exercises and teaching yourself by repetition what the pattern looks like, how to frame it over and over and over again. Even though it's hindsight and you can't trade it, it's teaching you how to recognize it and how to frame it. And you'll see that there are repeating phenomenon and characteristics to these specific, very simple approaches to trading that's taught for free on this YouTube channel that are consistent. They occur every single week. But all you need to find is one candle or high that's pierced. And if it breaks and it has a shift in market structure, which is a short-term low right before it creates the runner higher high, then you anticipate a optimal trade entry. The fact that it's hindsight, you're not going to have any fear of being stopped out because it's already happened. And that's perfect because you can't lose. You can't make money. You're only focusing on identifying the structure and pattern. And by knowing what that looks like, comprehensive approach to learning from back data, historical data where nothing can influence you from a greed standpoint or a fear standpoint, you are taking all the psychological elements out of it, and you're taking the money out of it, and you're teaching pattern recognition. When you were in grade school and you were learning the alphabet. Was it going to make you any money or take any money out of your pocket if you didn't know how to draw or write or recognize the third or fourth letter in the alphabet? No. You were being conditioned to do what? The same thing over and over again. You'd have a little ditto paper, okay, and they would give you an example of a capital A, and you'd have to fill the whole page up with a capital A over and over and over and over again. As boring as that was, your hand would hurt at the end of doing it, but you were expected to do that. And the next day, what letter would you be working on? The letter B. And what are you doing each day? Pattern recognition. Was it profitable for you? Not at the time, but now you can write letters, you can send text messages. It's useful information to you, but you started that way. Pattern recognition. You have to strip trading down to that elementary state where you're not influenced by anything monetary or psychological. You're not elevating yourself up with ego because you called something right, or you're not deflated because you got it wrong because it's already happened. And you're conditioning your subconscious to see this pattern over and over and over again. And as you go through and annotate, you're not limited to this. You can put more details in there as much as you want. How much time did it take before it moved 1.5 times your initial risk? How much time did it take before that would happen? And these are things that you would build up. And you're going to see these reoccurring characteristics are in the majority of these setups. And you're also going to relate to what day of the week these patterns are forming and how that relates to the weekly range. Which days produce the best setups for shorts? Which days produce the best longs when it's bullish? And keeping that log going, the rest of your career, that's what you're going to do. You're going to be doing this the rest of your life, charting and annotating your charts. But in the beginning, you have no idea what you're looking at on the hard right edge of that chart. So to eliminate all that fear and performance anxiety, just don't worry about that. Teach yourself pattern recognition. And using this as an approach to initially start it, this is how I would do it. If I was 20, starting all over again, just using what's on this YouTube channel, this is exactly what I would do. Until I talk to you again in part 3, be safe. All right, folks, welcome back. This is part 3 of how I would restart at 20 if I had the opportunity to do so. And the pantomime here I'm using is I've done 6 months of back testing. I've grown accustomed to trusting that the optimal trade entry pattern forms rather consistently during the 8:30 in the morning to 11 o'clock in the morning New York session time. At any time, if you only watched this video, it's advised for you to go and look at my Optimal Trade Entry Pattern Recognition series and the Optimal Trade Entry or OTE Primer. Those videos are found on my YouTube channel. So in this lesson, again, I'm focusing on the understanding that we collectively agree that some time has passed, and I recommend 6 months, as I mentioned in part 2 of this series, of backtesting and keeping a log of what the pattern looks like. So assuming that's done, how would I engage Eurodollar in the New York session on a daily basis? I'm going to cover that with an actual example, not just hypothetical. And how might I visualize optimal trade entry patterns? And how would I frame the targets and filter setups? All right, so here is the hourly chart on the Eurodollar. And before I get into this, just note that I did record a execution, and the link to that video on the execution and management where it hits the target, as you can see here, the entry and exit arrow. All of this has been recorded, so you can see there was an actual example. I'm not talking from pure hindsight. I'm using the actual things that I used in the trade example, and I'm going to teach you more depth behind it. And this is exactly how I would go into if I was starting all over again as a 20-year-old using just the information on this YouTube channel, just my ICT concepts, everything as Inner Circle Trader, me, Michael. The things I would focus on primarily in the beginning is exactly what I'm showing you in this video here. Now the framework, obviously, if you go through all of the videos on the Inner Circle Trader YouTube channel, I teach this idea here. Okay, and it's relative equal highs, and retail sees that as a very strong resistance level. Wyckoff does not talk anything about that specific area in price action, doesn't talk about it, doesn't mention it, and I draw strong conclusions that most retail traders think with this logic. And I adopted that mindset initially as a trader by reading John Murphy's book, Technical Analysis in the Financial Markets, which is the retail trader's Bible. If you learn everything in that book and turn it upside down, you can be profitable. Okay, because that's essentially what I did. So if I look at this relative equal high, and we're looking at an hourly chart here on Euro, the idea is during the 17th of May, 2021, this pattern right here, this rally up that clears a short-term high and trades right back down into this initial low, trades back down in as an optimal trade entry. I like this pattern. This is actually one of my favorite patterns to trade if I'm only going to elect to use the optimal trade entry. Now, obviously, I'm much more versed than just OTE patterns, but for this YouTube channel, I teach that as the flagship pattern. I am absolutely convinced, 100% sold on the idea that anybody that learns this pattern can find consistency, can find profitability, can quit their job, can grow wealth. All you need is this one pattern. The problem is you want it to form every 10 minutes, and it's not likely to satisfy that itch. So what I want you to notice is the underlying framework is we're in a bullish market, and we have these untapped relative equal highs. Okay, so there's a lot of buy stops resting above that because traders that have rode this down, they're going to have a buy stop resting up there to protect their short position. And or anyone that's bullish will have a buy stop above that, and it also builds more liquidity for buying. Now, why is that interesting to me? if we're trading down here, because I see a rally from here up and then back down in that did not take this run above these highs. So in my mind, I see this as a bullish optimal trade entry because we have had a shift in market structure above this short-term high. So now momentum's in force on the upside. The retracement back down in 79%, 62% in that area, that's optimal trade entry. Now, it's not just simply the fib level that makes it optimal. It is the fact that we have this underlying framework where we rallied higher, broke a high. We have unfinished business up here, okay? That's buy side liquidity. That's buy stops that have not been adequately traded into. So this retracement back down in, I view that as optimal trade entry. Now, again, I'm showing you an example that I recorded through TradingView. I'm not using the bullish position where it just shows you rectangles and shaded areas. That's hypothetical. That's not an execution. That's not an entry. That's not a management of any position whatsoever. Yes, everything I'm showing you in this recording and also pointing to for the actual recording on May 17, 2021 was a paper trade. For compliance reasons and legal reasons, I'm not licensed to give you trade advice or financial advice. This is just my opinion, and it's meant for you to be stimulated by the idea and go into it and study it on your own. And you draw your own conclusions. If you make money, wonderful. You did it on your own accord. If you lose money, you own that too. Neither of those things, whether it be good or bad, are my responsibility. I'm here talking because I like to talk. If you don't want to listen, fine. If you listen and you do something with it and you hurt you, that's your responsibility to own up to that. If you do something and you make money, take all the credit for it because you took the initial risk. Hopefully we've made ourselves very clear here. But paper trading proves theory. It proves conceptual ideas are valid, and the rules that I teach in this channel are in this specific day and in this specific pattern. But the underlying framework is this hourly pullback right here. Now, in this little short-term turn here, this is also housing a short-term optimal trade entry, but that's on another time frame and another discussion for another day. But as we retraced back down in another time frame and another discussion for another day, housing a short-term optimal trade entry, but that's on another time. This is also housing a short-term optimal trade entry, but that's on another time frame and another discussion for another day. But as we retraced back down in, the underlying market structure is still bullish. The trend is bullish. The momentum is bullish. Even though it's starting to retrace, a lot of traders would see this and say, okay, we ran above these relative equal highs, and now it's coming back down to go lower. No. The underlying narrative is this is what they're going to aim for. Who is they? The institutional traders, the smart money traders, the non-Wyckoff people. So above here, those buy stops, it's the draw on liquidity. When this retraces, that's your setup. That's the framework. It's bullish. Now, we want to see it trade above these relative equal highs. Now, initially, if I was 20 years old and starting all over again, I would want to take something ahead of these relative equal highs because I'm going to grow
All right, so I'm going to be doing a silver bullet short this morning. I'm going to be noting the sell side here. And then we'll change the color here after. Okay, and I'm going to set a rectangle inside this. Here, I'm watching this one. This might present the silver bullet for this morning, aiming for that sell side. I really like the idea of returning back to the current new week opening gap high and consequent encouragement, which is mid. Midpoint of that. Okay, then change this color. All right, and I think what I'll do is I'll use a limit order just above. Yeah. All right, so I got 6 as a limit order, and for now I'll just put the stop loss right above fair value gap, targeting the sell side here. I'll manage this as I go. I want to see if I can build my typical 10 contracts into this. I want to limit entry, not just marketing entering. I'll change this to 4, and just a little bit below that we'll try to use a entry there. So that would be 10 contracts short if it goes up inside that fair value gap. Now, the only thing that concerns me is because we have that large range up close candle to the left of all of this decline, and the fair value gap I have noted here, that might become a balanced price range, and it may not even enter back into that. So I'll have to wait for a subsequent or later fair value gap. I've run the risk of missing the move, but it's better to miss the move than to try to chase it. So admittedly, I'd like to short it right in here, but my stop would be at 42.12. So it's a little bit more points drawdown than I'd want to suffer. So I'm willing to let it go here. Hopefully it goes up and hits the order. If it trades below, it would be too far down for me to almost after 10, and we have just now tapped into that low that was a draw. We get a shallow draw. Benefit of the doubt in here. These are all 1 minute rectangle down shaded. Now the silver bullet back up into it. And here, so it's kind of like an evolving silver. That initial range up there. Let me get these off here and adjust this. And this is the low, and this is the high of the new adjusted silver bullet. I just went like one tick new adjusted, and it went. Actually, I don't. New week opening gap high. If it fills it, it shouldn't go up there. Trying to think how I want to. Okay, well, we just got to fill. So all 10 contracts are now short. Stops at 42.0. What I'm looking at is how I want to do my exit. I want to see if we can drop in here, which is what I want to see. Let's see it like run quickly away from that gap. That would be, in my opinion, confirmation into the bulk of the move limit order. Strong idea that much. So 41.93. I'll take. I got about 75%, 2 and 4 locked in with a relative low risk. So we'll just see, just removing the, which is irrelevant, but this is about that low one in here. So into that current new week of accurate in my observation, we should see it. I run the risk of it going completely into. One second, stop here. As we take our first profit. Oh, look at that. Second, fourth. I'm sorry, the 4 remaining contracts. And there we go. Nice. Got a triple. So that's what a evolving silver bullet trade looks like. And
as a developing trader, and this is all pantomime and, hypothetically speaking, I'm obviously a developed trader and no longer an early developing student of the market. But I would go into it trying to take an exit just ahead of these highs being taken out. That's what I'm framing here, okay? Even though the arrow up here shows that it's on this candle, don't let that misinterpret where the exit was. The exit was actually below 2180, and it was just a simple 30 pip run. We'll talk about that when we drop down to the lower time frame. But for now, just know that if I was 20 and developing, I would trust getting out just ahead of these relative equal highs, because that would be the first stepping stone to learning how to do partials. Partials are taking partial profits and allowing a portion out before these highs are taken out, and then holding for something that may or may not happen, but it does obviously here in hindsight, you can see it. But I like to teach conceptually and with examples, with logic that is understandable, even though it may be long-winded at times. But if you want to learn something, don't you really want to know all the intricate components and the subtle nuances that make you excellent at doing it? Not just, here, I'm going to show you a magic trick, and you watch it one time, you think you know how to do it, and you go over and try to show your friends, and it blows up and you get embarrassed. Okay, you don't know how to do what you think you thought you could do. trading is just like that. And you don't want to just look at something and think, oh, this is easy. Let me go ahead and just do the same thing I just saw this guy doing a video. You need to put work behind it. And gradually working towards understanding taking partials is, again, a graduated process. You don't simply know where you're going to take a partial. So you want to start initially, and this is how I would do it all over again, is I would train myself to take something ahead of where my actual target was. Now, some of you would say, well, that doesn't make any sense, because why have a target and not hold for it? Because you don't know, and as a developing student, you sure as hell won't know if these highs are going to be taken at any time during your trade. It might come back and hit your stop if you don't know how to do trade management and stop placement. So all these things have to be balanced. And that's why I talk a lot in the videos, because I'm not trying to waste my time. I want you, as my students here, and those that want to incline their ear to my teachings, I want you to learn. I want you to learn it properly. I don't want you to learn from somebody else that thinks they know what I do because they know some of my lingo, my language, my vernacular. That doesn't equate to understanding how to do it actually. And that's really what I'm trying to press upon you in these videos. Not just this one, but all of them. Now, here is, again, a snapshot of May 17th, 2021. And I have not taken any trades since that day. All of this was pre-designed. I was using it for this teaching series. I have not blown the account. I've not added more wins. I have not taken any losses. I'm just showing you that this is the actual in and out, the orders, what time they filled, what time they executed, everything. Okay. So there was a stop placed. When the stop was canceled, it's not because I closed the stop or got rid of the order. It's because the sell limit order triggered. When that triggers, that cancels your stop. So I didn't cancel the stop ahead of the trade. I didn't trade without a stop. Watch the video that's going to be linked in the description below this video on YouTube, and you'll actually see a stop there. It's managed and using the rule-based ideas I teach in part 2 of this series. So with that, let's continue. All right, so we were back to this chart here, and I want you again focus on this area right in here, and you'll see that that price swing from this low to this high down to that low, that is the framework for optimal trade entry. It's optimal because it's within a larger area of potential running of buy side liquidity. So this high did not break that. This retracement only sets up an opportunity to get long and ride that to a run above these relative equal highs. You do not need it to run above those relative equal highs to be profitable. That's the major point. As a developing student, if I was 20 years old and trying to teach myself patience, I get a lot of questions even from my mentorship students. How do I develop patience? Because I put a trade on and I just want to get out when it's having just a little bit of profitability, and I just want to get out because I don't like the pressure. That's because you're trading with money that you should not be trading with, and you don't know what you're doing yet. You haven't conditioned yourself or desensitized yourself to doing the same things over and over and over again and not being dependent on the result being positive every single time. That's the purpose of backtesting. Training your perception of what these patterns look like over a long period of time, not just one sample set of a week or a month. It's 6 months. And you'll see how many times it fails and how many times it works. And using a rule-based idea, you'll see that if you're looking for framework of 3-to-1 or higher, but 3-to-1 minimum, even if you have losing trades, and I'll talk a little bit about that also in this video, they can be overcome and canceled out by a long series of more profitable trades than not profitable. All right, so we're going to zoom in a little bit here, and I'm going to draw your attention to this candle right there.